Greetings. This is Dr. Jeffrey Scott, and this is my weekend market update for the weekend of Sunday, August 13th, 2023. Doing this on the 12th. It may get posted sometime today. I titled this, Has a Significant Market Pullback Begun? Notice there is a question mark. Again, my name is Jeffrey Scott, and my email address for all to see is hgsidoc@gmail.com. Please send remarks either on YouTube in the appropriate section or feel free to email me if you have questions, comments about any of the tools I use, indicators, anything that I might offer for purchase, please just reach out. If you're new to my channel, trying to get to 1,000 subscribers. I don't know what that gets me except bragging rights, but if you click on subscribe, hit the alarm, you'll find out when I post these. Again, thank you so much for being here. As people who know me, I've been posting these videos for over 20 years. I do these for my friends and family. I recently started selling indicators because I had to pay people to develop them, but I really is just a guy that likes to trade and teach other people based upon what I've learned over the years. So welcome, and let's get started. As always, this is for educational purposes only. Anything I recommend in the spirit of education should not be considered investment advice. I am a doctor, not a broker. I'm independent. I pay for my own tools. No one pays me to say good or bad things about them, and I paid for everything that I demonstrate. And trading involves risk, and you alone are solely responsible for any investment decisions you make. Now, I do a lot of work for the BecomeABetterTrader.com group. Mostly I present at Wealth 365. I am in Wealth Charts, and they were gracious enough to start a daily website for me called stocksanddocs.com. That is purely a Wealth Charts presentation. It's done every day before the market open. Sometimes I record them at night, the night before, because of my travel schedule. And they do keep a mailing list. I don't get access to it, so don't worry if I'm going to hound you. But you can put your name in it in your email, and they'll send you notifications on the days that I post them. When I'm in town, like I was this past week, I post it every day. All right. So I always like to start top down, and I like to understand the market. So the first part, which is a PowerPoint presentation for those that have not been here before, is really to help me look at the market. Now, this presentation will be predominantly wealth charts once I get through the first 15 or 18 minutes of slides. And for those that are interested in TradeStation, TradingView, and other packages that I might use, I will do a second video this weekend that's going to really look at how I do the same things in other packages. You have to get what you're comfortable with. I think wealth charts as a package is outstanding. It's different data feeds. The education built into the platform are outstanding, plus the access to other educators besides me, and plus you get Rob. And Rob is dynamic, dynamo, just an awesome guy. But I know people use other things, what Rob refers to as legacy programs. So I did have some people code them for me. They're all independent. There's no relationship between any of the packages. But if you have interest, please reach out. So major markets tell the story. I highlight in yellow the big markets, in red the ones that didn't do well. Look at small cap growth on the week, down 4.9 for the IBD 50, 5.8 for ARC Innovation. Now, ARC Innovation, despite its bad week, is well off its lows of December 28th. Now, the interesting thing is on the major markets, you could see they were mixed. The Dow was up 0.7, the NYSE was up 0.5. The big losers were the NASDAQ, the Composite down 1.9, the Qs down 1.6. On the 1 day, things were pretty much the same. You can see the VIX was up on the week. That's never good. Although this is an inverse VIX, so that would be positive. It's the SVXY. Sorry about that. You can see how far we're off the 52-week highs. And so that really is telling you is the VIX is low. And we know what my friend George Lee used to teach. When the VIX is low, look out below. But that's only when the VIX, in my opinion, starts to go higher. We can see off the October lows, the only thing that's not in bull market territory is the Russell. It's up 17.5%. So we've been in a massive up move, pretty much unabated since March, with some minor pullbacks. Are we overdue? Yes. It's summertime. Yes. So we'll come back to that theme as we go on. Here's the sector performance, and you can see the utilities and real estate have been the big laggards. This is the Q-Edge tool. I use this tool intraday to look at the markets. And basically what this tool does for me is it, in a real-time basis, it lets me know what's going on. So for example, just to pull it up here, it tells me during the day what are the performance of the various sectors. Since 0 days today and 1 day ago is the same, you could see there's no difference in the sectors, whether I look here or here. Sectors, 64% were positive on Friday, 56 of the industries, and 52% of the stocks. So Friday was an okay day in the market, despite the fact that many of the indices were negative. If we look at the sectors on Friday, and this is S&P 1500, which is important to know, energy was the big leader, communications and IT were the laggards, things that had led us here. Over here, it tells me that 62% of the stocks are below the midline of the Bollinger Bands. That's pretty bearish. And we could see if the stocks can be in 10 different deciles of the percent B, the width of the Bollinger Bands. The first one, less than 1, here greater than 10, are below or above the bands. There's a preponderance of stocks are in the lower half of the band. So the markets have been acting bearish. Now, if I look back at 5 days, even though Friday was actually a good day in the markets, over the 5 days of the week, 73% of sectors were negative, 59% of industry groups, and 58% of the stocks. Over 2 weeks, the numbers are similar. And if you look at over a month, it's pretty much a 50-50 thing. So there's clearly been some strength in the market, although perhaps the last 2 weeks have been a weaker patch. Now, another tool that I like to use is this right here. Is called the PIP Stock Market Workbook. Call out to Nick Drendel. Here is his email. Stop the video, write that down. This will be the best like $50 that you'll ever spend. This sits on one of my monitors all day. I've actually asked him for a couple of improvements, so I'll keep my fingers crossed. I'd like to get IWM here because I follow it. But up at the top, you get your major indices. So you could see the Qs were down, diamonds were up, sputters were kind of flat. This is actually important over here because you'll notice that everything here except for the Qs finished in the upper half of their closing range. Why is that important? Because when those numbers are zeros and tens, which we saw earlier in the week, it just is a really bad day where we finished just off the lows. You could see that all the major indices are below their 8 and they're all except for the diamonds are below their 8-day moving average. All except for the diamonds are below their 21 exponential. So there has been some deterioration and weakness. And when you look here, you can see that the clear leader right now is energy with 91% of the stocks above their 5-day. And the only other one with more than 50% above their 5-day, interestingly, is utilities. And if we look at 1-day industry performance, we can see that energy, producers, gold miners, healthcare, defense, metals and miners, telecom, financials led the way. And there was weakness in China, and semiconductors are a problem right now, and we'll talk more about them. I think having this in front of you all day long is incredibly insightful, and the price is right, and it doesn't require any third-party data. So when I look underneath the market, I always like to look at the 10-year rates on the left in white, the 30 in white on the right. The S&P is the yellow, and you can see the markets have turned down as rates have gone higher, and they're approaching their 2023, 2022, 2021, and all the way back highs for quite some time. So everybody's worried about the economy. I think the rising rates are likely to tame the economy, and we'll see if the markets don't continue to ease unless there's a change in the rates. Is there a recession in our near future? I think the question mark's the right thing. Nobody knows for sure. We know that when we get below the inversion middle line here for the 10-2 and the 10-3 on the yield curve, that if you look back going to the 80s, it looks to me like almost all the time you get a recession, which is the gray bar. When you look at the Philadelphia Fed diffusion, every time we drop below -20, there's been a recession. Well, we dropped below 920 and got back above it, so maybe that tells you we're different this time. And I think before we get the recession, we're likely to see this high yield option and adjusted spread, which is sort of a measurement of credit risk. We'd expect that to spike, and it's definitely not doing it. So is there a recession in our future? Here's the secret. There is always a recession in our future. If you wait long enough, no one knows when it's coming. And as I said before, we're in the third year of a presidential cycle. We've got an election next year. Can Congress afford to stand back and let us go into anything but a very shallow recession? I don't think so. Breath eased. You could see stocks above the 200, stocks above the 40, and my 13-week new high, new low index all eased quite a bit on the week. That's, just a sign of the market being weak. It's not at any kind of an extreme. It doesn't tell me to expect a reversal. My buckets, this is similar to what I showed on the Q Edge tool. This is my long-term way of doing it using Edge Rater. Again, most stocks below the midline, but very few stocks underneath. When this number gets to 25, 35, I get my pencil sharpened and ready to write down my buying list. But it can get pretty oversold if we go into a recession. Now this one's perplexing. The Hindenburg is composed of a number of signals. The new highs and new lows are both greater than 2.2%. The moving average is rising. The McClellan oscillator is less than zero. And the new highs cannot be more than twice the number of new lows. So the interesting thing is we actually have been firing spurious Hindenburgs, which since they're within 30 days are confirmed. The last one on August 7th on the NASDAQ. And what's been weakest right now? It's been the NASDAQ. And when we look at new highs versus new lows, the new lows are creeping up on the NASDAQ. You compare that to the NYSE, there's no Hindenburg-Omen signals or Hindies. There's no new lows, and the new highs are consistent and persistent. It's a bifurcated market. I think the risk is again in the NASDAQ as it was in the beginning of 2022, although I am not by any means projecting that we have that kind of a sell-off out there. Markets turn down. This is a test that allows me to study markets by different variables and see how they impacted performance. Now, this is not a retrospective tool where we're looking backwards. It's taking the data from a week ago and looking forward. So on the right is my universe, which is stocks above 250 and 250,000 shares. ERG stands for EPS rank, relative strength rank, and growth rank, or group rank rather. Now, as a growth stock investor, what I want to see is the stocks to the right on that curve outperforming the stocks on the left. I want to see a steady increase as we grow. What do we see here? Everything is below zero, so for the most part, markets were down. And then in the universe of these stocks, stocks with low ERG really underperformed. This is different than the last couple of weeks where we saw rotation into downtrodden and weaker stocks. I'm not saying that's good or bad, I'm just reporting. Over here you see that regardless of EPS rank, relative strength rank, you underperform. This to the right, you increase the variable, in this case rank. To the left is your performance, and nobody's above zero. I ran all securities. Now that's 11,000 securities. It's going to include some ETFs. It's also going to include ADRs, and it's going to include SPACs, cheap stocks, low volume stocks. It gave a little bit different pattern. Everything was still negative. I just thought this was interesting when I saw this peak. So there must be a small segment of stocks that had some good performance, and I wonder, based upon the number of stocks in that area, if those are SPACs. And notice that high earnings actually were across all securities mattered. The one on the right's more important. I just thought the pictures being different was very interesting. So news easier this week. Nothing on Monday, nothing on Friday. You got Fed head Kashkari, who sometimes can make some bearish, hawkish comments on Tuesday at 11. And I think the big news is going to be the FOMC minutes from the last meeting on Wednesday. and then jobless claims, manufacturing, and leading economic indicators on Thursday. So in the scope of things, I'd say not so bad on news, but still news anyways. Now, if you look at the right, there's a bunch of retail numbers, and I think the ones that I'm going to be paying most attention to are a couple of them. All right, one of them is going to be Home Depot. I practiced and lived in Atlanta for a long time. Got to know Arthur Blank, who was one of the founders. Nice guy. Um, and so we always paid attention to Home Depot. Cardinal Health, they bought one of my companies. Don't have any more of their stock, but the drug distributors usually do well when the markets are tough. McKesson, Amerisource, and Cardinal. Continuing to look through these, Target, as I like to call it, a retailer, TJ Maxx, Cisco Electronics, Walmart, big one, um, and you could see John Deere. Now, I thought Costco's here too, and it's probably right in front of my face, and it's probably because I don't know the logo. But we've got some big, big retailers this week, and if Costco's not this week, it will be next week. Since I don't own it, I don't know the exact date. But as it says here, it's a judgment call to hold stocks over earnings dates. It's just bad judgment to not know when your earnings date is scheduled, especially since you can go to this website and they give you the list. There's also a way, if you're a TradeStation user, to put it on your charts. I'll try and include that in the second video that I do this weekend. Thoughts: markets eked out a slim gain while the S&P 500, NASDAQ, and Russell registered losses, so the Dow was up. Trading reflected consolidation mindset taking root in August after a huge, nearly unabated run for the market since late March. S&P, for its part, closed below the 4,500 level on Friday. For the week, most of this was done on lower volume. U.S. economic data was mixed. CPI was felt to be okay. The producer index a little hotter. Initial jobless claims low, below recession levels. I think mixed is the right word in aggregate. Moody's downgraded credit for banks this week, smaller banks. That didn't help. Earnings were all over the place. Disney, less bad than expected, up. SMCI, everything looked great, down gigantic. That's what happens when you have a climax run in a market that's topping. And UPS, which is maybe sometimes is considered a barometer for the economy, was down. So what did I do? Well, before I get there, energy, healthcare up, information down. We saw some of that on the Q tools. Those are S&P 500. The Q tools are 1500. You have to know what is the makeup of your indices when you talk about them. So this week I did add to SQQQ and SARC, raised a little cash, still have long CEIX, CHX, KKR, tighten stops once again. I'm not sure we're going to have a big down week this week. It wouldn't surprise me to see a respite because we're sitting close to support, but we shall see. But I also don't expect us to have any big reversal either. I think we're going to continue to see low volume as we approach the end of summer, more consolidation of gains, and a downward slope of the market unless we get some unanticipated dovish comments by the Feds or something else that suggests the market should go higher. I think we go higher into year end. I just don't think we're done going lower. So let's go on to the charts. I will be doing a meeting in December. Still working on it. I'll be seeing one of my friends, John Person, who has one in December. I don't like to do it at the same time, but I do like to overlap subsequently, the next day. And so I may have more comments for that later in the week. So let's go into wealth charts. Again, I use a lot of platforms. I have pretty much switched my weekend videos to wealth charts because, hey, it's easy. Got a big and growing user base, and it's a complete package. But I also recognize people use other things, and that's why you'll see another video today that will show you other tools that I use. So I start with hot stock. Well, actually, I start with the weekly market timing because it's a weekend. So I need to pull this over because we are still in a buy. If you look at my weekly timing signal, now just because the weekly timing signal is green, it doesn't mean I'm going to go all in on the markets. It means that until proven otherwise, the longer term signal is still bullish. And we can see that that signal comes from two things. It comes from price on the weekly chart closing above the 30-period WMA and the weekly bongo being green. If we are truly done with this market pullback and sell-off, we may get a very long period of time where both of those characteristics are met. However, that doesn't mean we won't have periods of time when there's pullbacks. And if you knew that this market was going to continue going higher, you'd be less concerned on the short term. Well, I can't do that, so I do have my short-term concerns, so my conviction is lower, but the thesis that this market is going to ultimately go higher is still intact. Now, I like to look at hot stocks. It gives me a sense of what's moving. And the thing that's going to pop up here is XOP. Now, XOP's got a flame, so that means it's had a big move in the scores. And this is sort of the wealth charts tool, multi-time frame tool of relative strength. So that's important to know. That's good. So we might look at XOP later. And I can tell you energy is where it's at. All right, then I'm going to go look at the major market indices. I'm going to go into the 5-minute spider and let's look at the week we saw because I think it was an interesting week by many counts. All right, so the prior week we sold off and coasted into the weekend. I commented on my morning video a week ago Friday that I expected low volume in the afternoon and that the market would probably drift lower. I don't think I expect it would drop like that, but the market sold off a week ago Friday. Monday, gapped up, traded up the rest of the session, and really closed at the high. And that was a pretty good day, and it made us think, oh, maybe the market's coming back. Tuesday, gapped down, and I think a lot of nervousness going into the CPI on Thursday. So you have the gap down at the open on the 7th. Excuse me, gap down on the open of the 8th. And then the market kind of traded in a box and closed at the low of the session, which is not a strength. And I think a lot of, let me get all my dates here. Here's the 7th. Here's the 8th. All right, here's the end of the 8th. So that is now the 9th, which would have been Wednesday. We got the CPI at the open. Market sold off initially, ran into the end, and then in the last hour and a half on Wednesday, the market sold off again, potentially worrying about the PPI and the jobs number. Well, we get the PPI and the jobs number, and they're initially felt to be favorable. So the markets ran up, peaked, gave a shooting star, and then the rest of Thursday it spent selling off. And then on Friday, markets gapped down, but unlike the rest of the week, they actually traded up the rest of the day. So the theme of the week was Tuesday, gap down and closed higher, but still down on the session. Wednesday at the open, traded down and stayed down. Thursday, gapped open, closed down. And then Friday, traded up in the beginning and traded sideways. And I probably confused you on that. Suffice it to say that this is where the prior week ended, And you could see on the week, we had a lot of activity above that line, and we closed down here. So we closed below it opened. So if we look at the spider for the 5 days, we can see that they dropped. If we look at a weekly spider, you could see a candle that shows we originally opened up higher, traded higher at some point during the week, traded much lower, and then closed just a little bit before the prior week. And on the week, we were down 0.26%. You could see here, this is sort of the map that I put, was that I thought we would dwindle down to the 50, get a bounce, retest, and if we were lucky, go on to new highs. Well, guess what, folks? We have now pulled back to the 50. I made the comment that we might be at close to an area that we might reverse, and I'll say it again, we're close to an area we might reverse. So I'd be very careful loading up the shorts right now. But we pulled into the 50. A break of the 50, one could look at 430 as a potential next stop. And then below that, 420. And 420 was an area that we had a hard time breaking for quite some time, which is why I actually have a red line. Let's hope we get the bounce early. I don't think this is it. I'd love to see a bounce and a retest and then go higher. The Qs. Now the Qs broke down below their 50. This here is the anchored VWAP going back to the 21, 22 highs. But we had a nice doji indecision day on Friday. This is the kind of candle that, maybe we get a relief rally because this one says we could go higher or lower based upon that candle. I would have liked to have seen the 50 hold. It didn't. It was down 0.64% on the day. And as we know, the Qs were the weaker part on the week, as we could see here, down 1.56. The diamonds, let's get the daily. And you could see holding up better than the rest, well above the 50. And the 50 sort of coincides with an area of resistance here around 345. Holding up nicely, and the Dow was up 0.32. The Russell, talk about being at a place you'd expect a reversal. Here's the anchored VWAP from the highs of 21.22. It was resistance multiple times. We broke through, and nothing's better than when resistance turns into support. And isn't it nice when that's right where the 50-day moving average is? So just looking at those four, I could see optimism of why I might expect a short-term reversal to the upside. No, I'm not convinced we're done going down, but if we're going to get a bounce, this seems like a very logical place. Here is the VIX for the 11th, which is Friday, and you could see the VIX opened high, a little bit lower than before, traded much higher, and then closed much lower on the day. So the VIX is not acting like the market's going higher or going lower. The VIX was down 7.02%. And then the dollar, which is probably the thing that worries me the most, was up 0.21, and it's in this congestion zone, but it's approaching multi months and more highs. So you can almost argue that let's create a rectangle here. That somewhere in this range is probably where the dollar is going to stop. So maybe the dollar is also at a place where it's getting close to reverse. I hope it stops in there. If we go into commodities and the dollar's strong, you know what gold and silver are doing, or you would think. And what do you see? Gold, flat on the day. Silver, down 0.14%. They both have had huge drops. Even silver's taken out to 200. They may stay that way until we get some news about the Fed talking about holding more or the dollar coming down. Oil has been super strong. Maybe it's giving us a little bit of a flag in here, a little wedge. Natural gas, one day's good, one day's bad. And what's much higher off of where it was is the 10-year, which was up 2.16. And I like looking at this one on the weekly sometimes. And when you look at the weekly, I want to show you a couple of things. The weekly is right off of the closing highs. Let's put another rectangle in. What the heck? New toy. Sometimes rectangles are better than lines because the markets are not perfect and they're going to do what they're going to do. And so, I mean, that would be my target zone. And a break above that, I think the market's in big trouble. You know, we think about how the higher rates impact us on mortgages, um, credit card debt, buying a new car. Who's the biggest debtor in the country? And that's the Fed, the government. These rates are killing the government and the debt service. They have a incentive, I think, to lower rates at some point. So 10-year high, dollar high, those are the concerns. Now notice how these lines are very similar. As the T and X goes up, this line went up. As this has come down or went sideways, this line has come down. When the line is heading up, value is in favor. When the line is heading down, growth is in favor. Rates go up, growth is in favor. See if I find a place here. We're back here at October 15th. Let's go take a look at October. When rates fall, you get growth outperforming. So the reason why growth, especially small cap, might be petering out a bit is probably very much rate driven. Anything on the breadth signals? So we look at the spider TLT relationship. A spike here would make me worry about recession. No spike, no supplies. It's pretty clear that we have seen a change in the next two where the equal weight spiders are performing as well or better than the cap weighted spiders. The equal weight Qs are performing as well or better than the cap weight Qs. You could see here that the Qs are now underperforming the Russell. This was major overperformance. 50 versus FANGs, still favors the FANGs, but that's some changes. If we look at sectors on an hourly basis, what do we see? I could certainly convince myself that the defensive players, staples, real estate, utilities, and healthcare have turned up. Now, they're not leading the market. They're not leading the market. But the fact that they've turned up tells me there's some interest rotating in there. Look at what technology has done. Technology has sold off hard, and that's pulled discretionary with it. You look at the other parts, communications held up, but energy is leading by far. Financials, industrials are where it's at. So there has been clear rotation in this market, and even communication looks like it might be taking a breath. When I go into my stock scanners, we'll start with a heat map, and we'll look at the S&P 500. And, you know, we used to have a thing with Ian Woodward where we'd call a sea of red. It's not quite a sea of red, but the big cap things, the bigger squares, are red. But there is some strength hidden in this market. A lot of them you got some energy, you've got some financials, especially the big banks, a little bit of healthcare. But you could see it's not a very strong market. Wealth scanner, that's my favorite way of looking at industry groups, sectors, etc. So a couple of things. The power of time. We had everything above 800 a month ago. We have one thing above 800. That should check a box and tell you that the markets have not the same markets as they were a month ago. Pharma, gas, healthcare, producers, energy, short bonds, dollar. And after that, we drop below 500. I don't even want to look at these. This tells me the market has changed. Healthcare, this is defensive stuff. Okay, so that might impact on me. Now, if I want to see the bearish setup, let's just let that run. And then let's flip the arrow. Real estate with a flame got worse. Gold, silver, dividend payers, solar, utilities, biotech, bonds, gold, bonds, volatility, the innovator IBD 50. So this is where the weakness is. Now let's flip this back to bullish. All right. So that gives me a sense on the market. Since I'm at support, even though I did find a lot of ugly charts this weekend, do I really want to go out and short this market? I'll answer it for you. I got to be careful with that. I've got some SQQQ and some SARK, but we are at a point we bounce. If we break through these levels, which is probably 50-50, then I think I have a reason to get more committed to the downside. When the downside happens, I will short individual stocks. I'll buy puts on individual stocks, and I'll look at contra ETFs, especially if I have accounts where I can't go short. But I want to see us break through support. It's dangerous, in my opinion, to short when you're at support and right off of 52-week highs. Just my opinion. All right, so now I've identified that I'm tepidly long. Really, I'm neutral. I don't need to buy anything, but I'm tepidly going to look to the long side. How do I sort this out? So we know that I liked energy and healthcare based upon this. So now I'm going to flip you to my CAT scanner, and my CAT scanner is my go-to tool. So let me give you a little background about this CAT scanner. People used to laugh at me because I would identify my best trades by showing a MOBO breakout, which is a breakout in momentum, from a pullback in a squeeze with a kahuna, which is another momentum indicator. And then I'd look at pocket pivots, which is a Gil-Morales indicator, which is big volume or a big gap. And I would look for the same thing over and over again. And I've been doing that for 30 years, and I'm still here. So how could I build a system that could just find me the stocks that meet my criteria and not have to look at 1,000 charts? Now on Friday, I like to look at 1,000 charts, but the rest of the week I don't. And that to me is where a scanner came in. And Rob Hoffman talked to me and he built this for me. So I have a number of pre-built scans, and this is my favorite. I'm looking for stocks that have my price and volume minimum. I like trading options, so I just put liquidity of 1. No, that's not very liquid, but either have them or you don't. And if you have them, you're going to be a 1 or higher. All I'm looking for is, do you have options? Then I come through here, and I could have put squeeze on. I did not. I want to have at least one bullish dot. My dots are breakout, momentum, volume, and gap. I don't know the beginning of many long runs in any stock that didn't have at least one of those at the same time. And in what I found, the more occurring at the same time, the better. Now, what sometimes tricks people up is the next one. Bongo daily bar reversed less than or equal to 9 bars. So I want pullbacks in an uptrend in this scan. My weekly bongo will define the uptrend. If my weekly bongo is in an uptrend, I'm in an uptrend. Now, if the daily bongo goes from uptrend green to downtrend red, yet the longer term is still green, that's a pullback in an uptrend. At some point, that's going to reverse if we stay in the uptrend and go higher. I want to buy it when it reverses, especially if there's one of my dots occurring at the same time, volume, gap, breakout, or momentum. So the 9 is arbitrary. If I set it at 1 or 2, I get very few stocks. If I don't have it, I get stocks that have already moved too far for me to buy. So you can play with that number. And I want bongo daily and weekly bullish. The fact that I wanted a reversal within 9 days, but I want the bongo to be bullish on the daily says it had to go from bearish to bullish. So that's the basic parameters. Let's take a look at, we'll start with energy. So I have built watch lists. This is energy. Let's look at dots. And Warren Buffett is happy because the one that comes right up to the top on energy is Oxy Petroleum. So let's just go through my chart here. Let me tell you what I see. And before I tell you, let me make sure I've got it set right. And I don't. Ha, ha, ha. Angle up. Okay, triangle down. Apply. All right, so what do I see here? I see a stock that was in a long uptrend on the weekly, a weekly pullback, and now it's in an uptrend again. This here is the weekly bongo. Here is the weekly bongo on the daily chart. So we know the weekly bongo is green. The third one down there is the monthly bongo, so it's also in a monthly uptrend. The top one is the daily. Here's my pullback I was looking for. And you can see the daily went red during that period of time. And when it came out green and gave me dots is when I get excited. So this circle is the Rob Hoffman wealth signal, which is a wonderful signal that's included in the basic subscription to wealth charts. The triangle is my signal called the EMS, which is a little faster firing. And it's an algorithmic buy-sell signal, which works intraday. And I've used it to trade futures when I've been on my non-compete time and not working. But here is where it counts. Volume, okay, the three dots. The top one is a volume dot. The next one is the breakout dot. And the third one down is the momentum dot. There's no gap dot here. This here is the squeeze, and the green is when I came out of the squeeze. So I'm not squeezing. I do like squeezes even more. This here is what I call my high-low jump. I look at this number. If it's above 95, it says don't go long. If it's minus 95, don't go short. It's not, so it doesn't give me a signal. This is relative strength compared to a moving average. I like this, and this tells me relative strength is strong. And then down here is OBV is strong. So I would say right off the bat, Oxy Petroleum, which we know Warren Buffett has a big position in and said he wants to buy more, is attractive here. It's not gone too far. Fresh buy signals. I like Oxy Petroleum. Kinder Morgan is a dividend-paying transmission MLP company. Also attractive, a new EMS, breakout and momentum. Volume is good. It's just not real good. Relative strength and OBV are good. And as I mentioned, KMI pays a dividend. And in fact, it pays a 6.36% dividend. So in KMI, you've got a stock that's pretty much chopping around, especially when you look at that weekly chart. And but looks like it might be ready to go higher, especially with strength in the group. In fact, you could look at this weekly chart perhaps, and now let's just throw a trend line in here. A breakout above that trend line would be very bullish, and you get, as I said, a 6.36%, I believe, dividend. Okay. The next one down is Plains Group Holding, another MLP, which pays a dividend. And look at this pullback. It's ready to go. It's going higher again. Just flipped from the bongo. And again, we got breakout and momentum. Not much volume. Plains Group. Antero Midstream is another one in this group. So you got a lot of stocks in this MLP space that look interesting. Now, I have other tools that I'll use from time to time. So let me just tease you because this is a great tool. It's called the Q Vital tool. So what I'll commonly do is if I find a stock I like, KMI, I'll stick it in here. And it tells me a lot of things, including the fact that it's not at a great valuation. I want this to be whatever that color is, light blue, teal. That's what I'm looking for. But this is telling me the other stocks that are in the oil and gas storage and transportation industry. And then what's really cool is I hit this and it brings me up a list of the stocks that look just like it. And if I click these stars, it's going to try and find me if there's anything that's got a good valuation and is in this group. And you can see there are a number of them that look good. And let's just look here. You could see earnings per share growth on some of these is just ungodly. Revenue growth is good. Here's the dividend yield. So let's look at DHT and we'll look at TNP. These are not, those things were not driven by chart. That was more scanning and looking at from a fundamental perspective. So one of them was TNP. So this is one that's had a beautiful breakout here, pulling back, giving us a bit of a flag. And, you know, there's a way to play this in my book, which is you draw a trend line in my book. That would imply I have a book. Maybe someday. But right now, I still have a job. So there's going to probably come a point where this line might become meaningful. And a break above that line, I might be interested. And if I look at what's the dividend on TNP, 2.8%. That one looks good, but I'm looking for a fresh move. It's not there yet. The other one that popped up is DHT. Again, not giving me a signal that I'd want to buy it right now. That's one that has a 14.6% dividend. Now, what's interesting with this group is you can tell they're coming out of some bad time because their historic earnings per share growth has really been very negative. So don't think I like any of those. So AM, CHX, this is a oil services company. I actually have a position in this. I like this. Now, let me just put that in the same tool and just curious what comes out of that tool because that is CHX. So I know people get mad at me when I use different tools because they don't have them all. Well, how do you get exposed to things if you don't see them? So we're taking a look at this. This is going to take a few seconds, so I'll pause. Okay, so I ran CHX, so oil, gas, equipment services. This isn't a big dividend payer, 0.92, and it's not a good valuation. That's not a surprise. I think we could see on the chart that it's had its run already. And the high jump, you know, high jump says it could go higher, but it's already had a big move from 26 up to 36. But are there other things in this group that might be worth looking at? And that's what I use this other tool for, to help supplement my evaluation. So what do we see here? We see a large list of stocks that are similar. I'm going to click this. It's going to pull up a spreadsheet of the different stocks. Maybe it's not ready yet. Let's see. Server response is not valid. Don't do that to me. Okay, so now I pulled up some technical data and some fundamental data, and I just like to hit those 3 stars and see what comes up to the top. And these are 3 different, or not 3, these are a series of oil services companies. So let's take a look at them very quickly. Pump, just to see if any of them look actionable. Propterra Holding Company. In a squeeze, probably worth watching here. Not bad. Just nothing that says do something today. Because the problem is I don't know how many days before that one moves. Select Water Solutions. Not that exciting. And this is looking for undervalued stocks. So if they're undervalued, it wouldn't surprise me if they don't have great patterns. So this actually shows up still as undervalued. This one had a big breakout here, Ranger Energy Services. And it's got unbelievable fundamentals, pays a 1.6% dividend. That's one I'm going to go add to a buy watch list and take a look at it. NEX, try this one. So I tell you that there might not be any good ones. I already found one. This one looks interesting, but I want to see it break above this point. Slowing down. LBRT, LBRT. Again, slowing down. I like to see some come in. SLCA, one of the fracking companies. Not too exciting. HLX, HLX. Now, Sager and Andy, whose tool this is, he likes buying stocks that pull back, and he likes buying undervalued stocks. So these are giving the types of stocks. I'm looking for some momentum signals. Now, I might put all of these on a buy watch list. Soy, again, this one looks great, but it's already run. So the one that I own is CHX, which looks great. Okay, but I'm not sure I'd recommend to buy right now. The one that I actually put on my watch list for buying is Schlumberger, which looks a lot mine, but it had a base here and is breaking out, coming out of a squeeze. This is one of the two granddaddies of the business. HAL, Halliburton, is the other granddaddy, and this one's been in a beautiful run as well. And then the one we just came up with, was it Ranger, RNGR, as one to take a look at. Has broken out, but looks to me like it might go a lot further. So that's my energy. Now, pharma biotech, I think it's going to be tough. We looked at it Friday morning. We saw some things, but biotech's been hammered. Pharma's been strong, so it's drug and biotech, I think it's called. Bio and drugs. See, here it is, biotech and pharma. And so CABA is one that I do like. Now, the downside of CABA is on the daily, it's going sideways, and who's to say it doesn't continue? What I like about it is how the relative strength in OBV picked up. It's not extended. It got breakout in momentum. It flipped its bongo. Probably a relatively low risk buy. I like the picture right where it's at, EMS and two dots. Earnings are out. It had a, when you see a negative 15, but on a stock that's negative, it means it lost less than expected. It had a 7-cent surprise. I like that one. GSK, I don't think I looked at today. Now I know why. It's kind of doing nothing. Cura Oncology, I don't like it below the 200. I'll look at some of the stocks that I like before we say goodbye. But that's my approach to top down. If you're new to me, I looked at the markets. I made my comments. I do some internals, which is the PowerPoint. I looked at where the money's going, and it's going into pharma and energy. I dove deeper into energy because I think that's where it's at right now. And then I looked at biotech and pharma. Now, I could do bottoms up where I put a large basket of stocks that I generate. It's called my combo buy list, and I put that out every week in YouTube in a format for input into wealth charts. And these are some of the stocks that come to the top. Let me make a comment on a couple of them. I don't know what Evolve Technology does. It's a cheap stock, but what a beautiful pattern. Sideways move. Here's a little pullback on the weekly. Big breakout, massive volume, 4 dots, gap, volume, breakout, momentum. Relative strength in OBV off the charts. The challenge with this is it's extended. I think I could live with this level of extension. This is one. InnoData was another one that showed up on my scans. 4 dots in a squeeze. Relative strength OBV. High-low, not a problem. That one looks interesting. Don't know what it does. Spectrum Brands I did not like because I don't like to buy this pattern. That was a gap up. Awesome. Traded much higher and closed below where it opened. To me, that doesn't merit my chasing. You'll notice it says 4 dots because it did gap. I killed the dot on the chart because it closed in the lower half. UBS, can you imagine UBS, a European bank, breaking out and looking this strong? I'm going to do some research on this. It's not overly extended. 4 dots, relative strength, OBV. Earnings are not due until here. So you got some time before earnings. That's intriguing looking. European bank breaking out. When's the last time this stock was this high? Well, that's volume. That's not the stock price. A long time, folks. This is interesting. A fresh breakout on UBS. I'm sort of shocked, but it is what it is, and that looks interesting. Clean Spark. This is, I think it's an EV battery company. I actually own it. I'm embarrassed to say I don't know what it does. I own it because of the breakout here. And then why did I pick it up? Look at the volume on Thursday. Look at the 3 dots. Bought it at the open. Too early to say if I make money on the trade, so nothing there. I just love the pullback into the 50. And then there you go. You got your dots, your volume, your relative strength, and OBV. Clean Spark probably comes up and tests 759. I don't have much in it. We'll see if it can take that out. Groupon, that's an old name. Nice looking chart for an old name. Breaking out here, volume, 3 dots, relative strength, and OBV. You'll notice there's a continuous pattern. I do the same trade over and over and over again, and I've been doing it for a long time. Uranium, this one looked kind of interesting. I guess it's still too sideways to say, but I like the relative strength picking up, so I'm going to be watching that as well. AppLovin probably is a day late, or really 2 days late to buy, but this was a stock that had a big gap up on earnings. Find the green one there and click on it. Somewhere in there. Sometimes you got to spread it out to find it. There it is. Nope. Right here. 214%. Was supposed to make 7 cents, made 22 cents. This is a stock that's well off the highs. I heard the CEO or somebody speaking on CNBC. I thought that was interesting. So I think this is another one to be looking at. AppLovin. It is extended. That's the problem. So I might be careful with it, but it's way off of its highs. So that's how I do bottoms up. I put a list of stocks in. I run it through my scanner. There are other things I'll look for. I'll look for stocks that are really bottomed out, and then something like AKRO is interesting. Now I'm not sure I would consider this a horrible bottom, but it was a bottom enough to flip the weekly bongo. And this scan does not require the weekly bongo. It requires the daily bongo to go green and have momentum indicators. So AKRO is an early buy, but one that looked interesting to me. Wheaton's precious metals. Silver's not doing well, so I'd be careful. But look at this. Despite silver being down, now we can look at the earnings, and you could see it had a pretty big beat, 16%. So here I looked just by looking at a strong list. I was able to find these stocks. Rockets will be stocks that are going to the moon. That's going to the moon. This one we looked at, Telesat, had a big move up here. They're by design, they're not really actionable. Many of them are extended. There's Clean Spark, etc. So that's how I do my analysis. Very quickly, let me see if there's anything I want to comment on my buy watch list. I've got a big list. I can't say I love them, any of them. And none made me want to go out and buy them. ABCM, Abcam, I do like this pattern. Pull back after a move, pulled right into the 50. You can see I've been looking at this one. There was actually that thing, so let's draw that down around the highs. So I took out. This one is a buy on Monday for me if it trades higher at or above the current price. For me, this is not trading advice. I don't know what your count is. I'd probably look at this at options. It has to move up for me to buy it. Don't take this as investment advice. As I said again, this is education alone. But boy, do I love that pattern. Breakout, momentum and volume, relative strength and OBV peaking up. That one looked interesting. Many of these we've looked at already. Align is not giving me a buy signal yet, but it's pulled into the 50, and this has been a place that it's reversed before. Here's that AppLovin. Really like that one a lot. Axon, the old, what did this used to be called? The one that makes the cameras that the policemen wear. This one had great earnings. Let's see if I can grab it here. 79% beat, $1.11 versus 62 cents. This was a big winner. It sold off hard, but I think it's interesting here to look at it again, especially after that earnings. There's CABA. I mentioned that I have some CEIX. This thing has been behaving. Um, you know, natural gas is up, energy is up, and we still use a lot of coal, which is why I have a position in it. Would I enter a new position here? No, I would wait for this line to be taken out. And if it gets taken out, why not? It looks pretty good. And look at the earnings. 494 versus 443, 11% beat. Going down the list, Costco, I love the chart. I just would have to know when earnings are before I would even start paying attention. It's got a dividend coming. Is there anything else I wanted to point out today? I think we're good. So again, my thoughts for the market, not that matters, is my longer term, intermediate term signals still say it's okay to be long. My short term gut feeling says we're at support. A move off of support would be bullish and exciting, but support doesn't always hold. I wouldn't be jumping long or short until I see what happens at support. Have an awesome week. And for those that want to learn more about my trading view and TradeStation indicator and scanner packages, check out another video later this weekend. Have an awesome, awesome, awesome rest of the week. End.